Well, turn in now to your consumer news. You might start seeing a little more on your paycheck in the new year.
It is January 1st, 2024. Happy New Year. And some people are getting some good news from an unlikely place, the IRS.
And it's thanks to the IRS?
Yes.
What? All right, so they're setting higher federal income tax brackets. Also, the standard deductions are going to be a little bit higher.
Maybe some won't call it good news, but at least not as harmful as we generally think when it comes to news coming from the IRS.
So the standard deduction is going to be $29,200 for married couples, $14,600 for individuals, for people filing separately. The IRS says this is to avoid the bracket creep. That's when we get pushed into a higher income bracket, even though our purchasing power is unchanged. Basically, it's to compensate for inflation is the adjustment.
New IRS tax brackets take effect in 2024. Here's how the changes will impact you. Tax brackets are set to rise by 5.4% in 2024, allowing Americans to increase their take-home pay. So what the IRS is doing now is because of inflation and trying not to hurt people, they're raising the next tax bracket up so that you don't just find yourself all of a sudden paying more taxes because you made more money, but then that money, extra money you made, doesn't actually give you any more buying power because of inflation, and now you're paying even more taxes. So supposedly this is the government and the IRS's way of helping us. If you're new around here, we're always wary of the government when they're like, hey, we're here to help you. Usually that means grab your weapons and run the other way. So here's what we have, though. The IRS announced the higher limits, which would allow Americans to keep more of their own money. Even though the IRS makes adjustments annually, the increase are more significant for 2024 due to the high inflation rates experienced over the past few years. Despite inflation dipping over the past year, rates remain well above the Federal Reserve's target of 2%. Now, let's put this in perspective. This whole idea of yes, the inflation has dipped. It just hasn't risen as much. And when it came down slightly, it still is inflation, huge inflation overall. So that's the old idea of like, oh my gosh, this used to be $100, now it's $120. And all year it's $120. And then at the end of the year, they go, oh, it's only $115. And they tell you, oh, look, inflation is down. It used to be $120. And now it's only $115. It's gone down. And people go, oh, yeah, it was $120 last week. It's now $115. And we're supposed to forget that it was only $100 just 8 or 9 months ago. So that's putting it in simplistic terms. That's what's going on here.
Yep.
I never thought I'd say thank you, IRS.
Right.
But here we are.
Yep.
The adjustment aims to avoid what is called bracket creep, where Americans see an increase in wages but don't see an increase in their standard of living due to higher prices on the goods they purchase. Under the new changes, the standard deduction will rise from $27,700 to $29,200 for married couples, the IRS announced. Individuals will see their standard deduction increase from $13,850 to $14,600. The new changes amount to 5.4% increase in take-home pay for the average household, according to analysis done by Fox Business. The IRS announced several other changes to the 2024 tax rate as well. The alternative minimum tax exemption is set to increase to $85,700 up to $81,300 and will begin to phase out at $609,350 in 2024 instead of the 2023 rate phase out of $578,150. So a lot of people's eyes are glazing over and going, yeah, this doesn't really apply to me, but this is news that applies to some, so it is worth reporting. The maximum earned income tax credit amount for taxpayers with 3 or more qualifying children for 2024 will be $7,830, and that is an increase of $400 from the previous year. The IRS is also set to make several changes that would help taxpayers pay for healthcare expenses. This is being reported by CBS. Anyone who pays for their healthcare, pretty much everyone who's not like on government assistance, will know that healthcare prices are absolutely through the freaking proverbial roof. Under the new rates, contribution limits for flexible spending accounts will increase to $3,200 in 2024. That's an increase of a whopping $150. Health savings accounts will also see a higher contribution limit, with single taxpayers being allowed to contribute $4,150. That's an increase of almost 8%, with families receiving an increase to $8,300, 7.1% increase. As in terms of an increase, that's a little bit better than some of the other increases that we're seeing. Participants who have a medical savings account and self-only coverage will see an increase of $250 from 2023, and the maximum out-of-pocket expense amount of $5,550 smackaroos. And then to bring this quick report to a conclusion, families with self-only coverage under a medical savings account will see an increase of $550, with rate limits rising to $10,200 for 2024. Okay. Under the Tax and Jobs Act, the personal exemption tax rate in 2024 will remain 0 per the IRS announcement. I'll have other news that may be a little bit sexier and more interesting coming up, but this is the first day of the year. People are already thinking about their 2023 taxes, what the tax rates are going to be for the next year. So this was worth reporting. I will be back. Hold tight. Like, share, subscribe, and hit that notification bell.